Hello and welcome to our modern money journey. Just a brief reminder that I am not a licensed professional. This is not investment advice. This is for entertainment purposes only. We are in an economic recession. And it's great. Now I'm sure a bunch of you are like, whoa, hold up, what? Well, according to the National Bureau of Economic Research, the United States economy entered into a recession back in February. Okay, so what's great about it? Well,
You smell that? What is that?
What?
What's that smell?
A cologne?
No.
Opportunity.
No. Money.
actually there's going to be lots of opportunities to make money, and that's what's great about it. But if you want to spot these opportunities, you have to know what's going on and understand how things work. The economy goes in cycles. Many people talk about the business cycle that lasts approximately 7 to 10 years, where the US economy inflates and then deflates for about a year. However, Ray Dalio, the founder of Bridgewater Associates, which is the largest hedge fund in the world, has a theory that there are two distinct cycles that drive the economy. One is the short-term debt cycle that lines up with the business cycle of that 7 to 10 year range, and the other is a long-term debt cycle, which lasts about 75 to 100 years. Just as a side note, the Great Depression was 90 years ago, and the United States economy just suffered its worst GDP decline in history ever. So yes, it's a possibility that things could get really bad. So where are these opportunities that we're talking about? Let's talk about a few of them. Number one would be start a business or a side hustle. I know this sounds crazy, but a lot of businesses were started during the Great Depression or other economic downturns. Two of which that were started during the Great Depression were Publix Shopping Mart and Hewlett Packard, or HP. But not everybody's got the freedom to start a new business or run a side hustle. So another alternative is investing. One of the areas that I'm going to be looking to invest heavily in over the next year or two during this recession is the commodities markets. If you take a look at this chart on the screen, this is a ratio of the S&P Commodity Index and the S&P 500 Index. So on the red dots, that indicates whenever commodity prices are much higher than the S&P 500, which is equities or stocks. So in those green bubbles, which we are currently in, that is when commodities are cheap in comparison to equities. So right now in that green bubble, it's showing us that commodities are cheap and equities are expensive in comparison to one another. So right now would be a good time to be loading up on certain commodities. The commodity that I'm going to be focusing on the most over the next year or two is going to be silver, because like I said in the last episode, it is a small market cap play, so it doesn't take as much new money entering into the market to move its price. Another area of investing that I'm going to be looking at over the next year or two is real estate, because mortgage interest rates are really low right now and should remain that way for a while. But the area of investing that I'm most excited about over this next year or two is Bitcoin and cryptocurrencies. These are also, like silver, a small market cap play, so it doesn't take too much new capital entering into the market to change their prices and lead to large price moves. Our next couple educational adventures will be covering the commodities and cryptocurrency markets, so make sure to stay tuned for those. Alright, all you bulls and bears, we'll see you next time.